Hi everybody, Adam Libman here, and in today's video, what we're going to do is we're going to talk about year-end items that you need to do if you have LLC, S-Corp, C-Corp, specifically things that are entity related, and then just also things that all business owners should be doing for year-end. And on this call, I've got Kelsey, and she's
Hello.
going to say hi, Kelsey.
Hello.
So I prepared a document. We'll just review it together, Kelsey. And I'm sure most of these business owners they should be doing at least some or all of these items. And if you have any questions, please ask. And then I'm going to share my screen. Okie dokie. Kelsey, do you see my screen right now?
Yep.
Okay. So the first thing that I encourage all of you to do is file your statement of information with the state of California. That's a really big one. The statement of information, whether it's an LLC, S-Corp, or C-Corp. For an LLC, it has to do with the ownership of the members. Excuse me, it's the members. And for S-Corp, C-Corp, it's going to be your different officers. Those are the questions. California, it takes $25. Very easy to do. If you need us to do it, we'll do it for you. However, if you don't do this, you can get suspended, and it's just a really pain in the ass to get reinstated. Kelsey, any questions on your end about this one?
When is this due for clients?
Good question. So it's due depending upon when you originally incorporate. So you have to do it within a 3-month period, and then every year it starts over again. But what I encourage everybody to do, just because it's a year-end check, is just to check now to see if you can refile it. So even though it might not be due today for you, I encourage you to check now and do it. Does that make sense?
Yep.
Gotcha. Okay. The next one. So the state of California has an $800 franchise fee for all entities. Please pay this. Make sure you paid it. And then secondly, if you have profit, so if you're an S-Corp or LLC, I'm sorry, an S-Corp or C-Corp, in which you're going to have to pay more than the $800 filing fee because your profit is greater than the minimum, please pay that before December 31st. Otherwise, it's fines and penalties. And I have a lot of clients who are like, geez, Adam, you never told me. I'm like, well, you never asked. And but then it's kind of like, well, geez, who's supposed to tell who? So now we're just saying that's why we're doing this video today. So it's like we've informed you. Again, if you meet the minimum threshold of over, everyone has to pay $800 no matter what. If you have to owe more, just call us and we'll tell you. What you will need to tell us, if you're an LLC, LLCs are based off of gross revenue, and S-Corp, C-Corps are based off of net revenue. So you just pay that in. Kelsey, any questions on this one?
No, that was good.
Okay. The next one, this is really important, is to hold your board of directors meetings and take minutes. I used to think this was bullshit. And if you have an LLC, S-Corp, whatever, you probably get a lot of these stupid bullshit dummy like requests to do this where they'll do it for you. However, what I've learned is I've had a couple of clients that have been audited, and this actually did come up during the audit where the first thing the auditor asked was, well, let me see your minutes. Was this part of your strategy? What the minutes are really important for is strategy related items to show that you had intent to do a certain strategy in a certain time period, and it's not something you just manufactured after the fact. And really what they're looking for is, when did you conduct the meeting? And was it even conducted at all? Most people blow this off. So please hold it. What I would recommend is that you hold it. If it's just you and yourself and I, like I know a lot of you listening on this are like the secretary, the treasurer, the CEO, you're everything. Just make a note of it and just email it to me or to Kelsey. Happy to walk you through this if you have any questions. Kelsey, do you have any questions on your end about this one?
Yeah. So for clients, what if they're holding this meeting, what information do they have to give us?
Yeah, so the most important thing is who is at the meeting. So it's like, who are the people at the meeting, the location of the meeting, the date and time of the meeting, and what was discussed. What I find that's really helpful is if you're part of a mastermind group, you can make your mastermind meeting, your year-end meeting.
Mm.
And then what you do is you type out some basic notes. It's like, okay, this year we're going to raise revenue by acquiring new customers. We're going to use these channels to acquire new customers. We're going to change the pricing like this. In terms of expense strategy, we're going to hire new people and the revenue per employee is XYZ. If they're administrative staff, it's like, well, how much are they responsible for? If you're buying or selling businesses, why are you doing it? What's the intent to do it? If you plan on selling a business, I have one client who's in the process of wanting to sell a business. So you just want to make it well documented.
Got it.
Does that seem fair?
Mm-hmm.
Here's another really big year-end item, especially for S-Corp, C-Corps, is this has to do with a reasonable wage. This is a very controversial subject in the world of accounting. This is like the Kanye West of accounting. Come on, that's good, Kelsey, right?
Yeah.
Come on, I'm reaching here. I'm reaching. Reasonable wage is a very it's a very controversial subject. Anyway, you do need to do your year-end filing. As a general rule, 90% of most S-Corp owners have nothing. So the floor is low. Obviously, the bar of reasonable compensation is higher than nothing. So call me on this one. It does deserve a phone call.
Mm-hmm.
The last one is if you're creating a new entity, just beware of a lot of people create new entities at the year end. So they'll do it like December 10th, right? But then they don't have an activity. And so but then they have the $800 and they have the tax return and they got the minutes, they got all those bullshit fees. So if you want to do some year-end new corporations, just be aware of you can always post date. So the date of creation is into the next year. And then also just be aware of the ending date or the fiscal calendar year nature of the business and whether it's cash or accrual. So those are kind of like specifically LLC, S-Corp, C-Corp related, Kelsey.
Mm-hmm.
Do you have any questions in this world?
No, that was all good.
Okay. So let's just kind of move on to things that I think are just good for all business owners. Is this making it bigger, Kelsey?
Mm-hmm.
Okay, cool. So number one is if you're doing loans, whether they're shareholder loans, family loans, intercompany loans, related entity loans, just make sure you have agreements with interest. That's always something that's very important to do. Make sure you have a payment schedule, amortization schedule. If it is with a balloon payment, again, just document that. That's kind of the most important thing with there. And in terms of interest, recently the interest rates have changed drastically. I'm sure that hopefully for those of you watching, the Fed has increased, so it's no longer the standard 3-4%. It does have to fluctuate upwards. But so let's make sure that you have that in place. Kelsey, on this one, what questions do you have on this one?
No, I'm good.
Gotcha. Okay, perfect. Gotcha. Okay. And I am sharing the right screen?
Yes.
Okay. Sorry for asking. I can't tell. Oh my God. It's amateur hour here. Okay. This is something a lot of clients get thrown off by this, but it's called the LA city tax. And there's also the LA county. Actually, I should update this property tax. And every county has their own. So there's a city tax for some counties. I'm sorry. There's a city tax for some cities, and there's a county tax for every county if you're on record as being a business owner. So just kind of be aware of that. And that's usually due in the first quarter of 2023. Oftentimes people just forget about those and then they get a bill saying it's delinquent. They're like, Adam, you didn't tell me. I'm telling you now. Kelsey, what question do you have on this one?
How do clients know how much they owe in city tax?
It's going to be, great question. It's going to depend upon their gross income for that particular city. So I know LA city does it off of gross income. So you're just going to have your books up to date and know what your gross income is.
Got it. So clients should just send us their books.
Yeah, that would be preferable. Hopefully they're updated books, right? Yeah, that would be ideal. Are we good for the next one?
Yeah.
So this is a big one. If you have inventory, so if you sell a product, a physical product, make sure you do a year-end a year-end inventory check. Year-end inventory check. Most people don't do it. They forget to do it and they just make it up when we do it. No, they never do that. No client would ever make that up. Not one of my clients. Right, Kelsey?
No, not at all.
Never. But I would highly suggest you do a physical inventory. I'd even take pictures. So that way, at least you have some kind of like proof. I would even like have make sure it's date time stamped. Sometimes you can even be as paranoid as having like a newspaper clipping or whatever. Kelsey, any questions on this one? Yes, no? Oh, you know what I should add on this one? FIFO versus LiFO. Kelsey, are you familiar with any of these?
No, I'm not.
So this is an interesting question. It's worth talking about for our clients. So there's two types of inventory, and then there's cost average. Average cost. Average cost. Okay, first in, first out. So think about it like this, Kelsey. You're buying, you're going to Home Depot and you're buying some flowers. You're buying some flowers at Home Depot, and you're buying some flowers, and you pay $30 for a flower in January, and then in February, because of inflation, you pay $40, and then in December you buy that same flower for $100.
Oh geez.
But then when you sell it, you sell it for $200 because you know you're really good at sales. So we know for a fact that you sold it for $200, right? We don't dispute that, right? However, what is the cost of the flower?
Low.
Because not only is it low, but what do we use? The $30, the $20, the last price. So FIFO means first in, first out, meaning the first flower you buy is the first flower is your cost basis. LiFO is last in, first out. So meaning the one that you most recently bought is the cost price.
Got it.
Because it's possible, especially when you have times of volatility, that your cost basis can wild crazy. Like I'm sure you notice, like at Costco, things are way more expensive today than they were at the beginning of the year. But the question is, which cost basis do we use? So these are kind of, some people use average cost. So you're allowed to elect what cost you use. You just have to disclose it. And you also have to be consistent with it. Does that make sense?
Yes.
All right, cool. You ready for the next one?
Yep.
All right. So this is an exciting one, boys and girls. This is mileage. So for a lot of people, your car is your biggest expense. And a lot of service-based providers, especially real estate people, consultants, they just don't have a lot of expenses. So one of the things that is very important is mileage. And when it comes to mileage, you're supposed to have your how do you even know? So what I find is that an oil change isn't, an IRS agent will accept an oil change as kind of a marker of what is your official mileage. And then I should also, your mileage log. Oh yeah, that's a mileage log. Let's put that in there. And then a tracking app. So most people lose in IRS audits because of mileage, because it's just so hard to keep track of where you start and stop and start and stop, right? So there's apps where when you get in the car, you push start, and then when you get to wherever you go, you push end and start and stop and start and stop. And that's kind of a way to keep those mileage logs accurate.
Okay.
Yeah. And then also, if you have a lot of, like what they call it, a fleet, you can actually get GPS tracking. Because most people that are truck drivers are not like the most organized people you ever met. That's why they're truck drivers. But I don't mean that as a negative. If you're a truck driver, God bless you, because somebody needs to deliver Costco. Somebody needs to deliver Target, So, and I think it's a great opportunity, especially if you like meditating and driving while paying attention, of course. Okay. Are we good on that one, Kelsey?
Yeah.
So anyway, but just getting back, just get an oil change. Get an oil change. You should probably just get oil changes and just take just get oil changes and make sure it has the date and the odometer reading. That's the most important thing. Okay, for 1099s, make sure you have contractor agreements. In the state of California, there's a big question: are you a contractor? Are you an employee? I just think it's just really important to have if you have 1099 people, make sure they have contracts that specifically state they're contractors. If you need help with that, give me a call. I can help you with that. Kelsey, any questions on this one?
No.
Okay. All right. The next one we have, this is really big, is normally when you hire a contractor, a 1099 contractor, like they want your business and they'll do anything for you. And then when you end the business, they'll never talk to you again. They'll especially not give you a W-9. In order to create a 1099, you have to have a W-9, which will give you either their EIN number or their social security number. And you need that in order to issue a 1099. It's very common that a lot of people, so what happens for most people is they don't get the W-9 at the very beginning. And then next year, when they're doing the tax return, they'll be like, hey, can I get a W-9? And the person will be like, go screw yourself. Right? How often have we had that one, Kelsey?
Yeah, quite a few.
Right? And
Too
people,
many.
you're laughing. It happens so often because what happens is that, let's say there's a fight with the contractor. Let's say they disappoint you or you disappoint them. Let's say they threaten to burn down your place, which actually happened to me. Usually those people will not be responsive and give you a 1099. So what I always recommend doing is before the last check of the year, make sure you get the damn W-9. And then what I've noticed, if you say, hey, you want your last check, I need the W-9 form. As a general rule, good compliance with that one.
Yeah, I would say to even get it when you do the contractor agreement.
That is preferable, Kelsey.
I would advise that.
Yes, I agree with you 100%. Thumbs up. Thumbs up. All right, here's the next one for real estate people.
Oh, I have a question Adam, for the 1099. So,
go for it.
So what happens if our client isn't able to 1099 one of their contractors because they don't have that W-9?
Yeah, you can. So the law allows you to still write it off. It's just good question. Number one is you can still write off an expense even though you didn't issue a 1099. There might be an issue of not filing what they call the information report penalty. And it just looks suspect a little bit. So an auditor, like, okay, let's just say that you've got, let's say 10, no, that's bullshit. Let's say that you've got 100 contractors and you're missing 3, no big deal. If you have no W-9s for all of your contractors, that looks a little suspect. And then you're going to need the agreement. You'll need the invoices and all that kind of stuff. It just looks bad.
Yeah, get the W-9 people.
Yeah, get it. And here's what a lot of people do, Kelsey. It's not correct, and we don't do this. A lot of people, for the vast majority of contractors out there, they do not keep any record keeping at all. Like zero, Kelsey. It's zero. Zero. So what they do is in February, they add up all their 1099s and that becomes their income. And then they base. So that's the reason why the IRS is so concerned about this, is that a majority of contractors don't properly report their income. And I'd say that's very accurate, partially because they just have no record keeping at all. So it's not that it's like mean-spirited or fraudulent. It's just that a lot of these people are they're horrible bookkeepers. So what they do is they rely on people to issue the 1099 and then they just add them all up. I see that so often. And Kelsey, do you remember, I won't say his name. Well, I'll say his first name. His first name was Kevin. Remember the CP 2000? So it's also important that when you do receive your 1099s to verify that it is correct. We had one client where he received in truth a payment of $5,500. Well, the dumbass who was preparing the 1099s put in $55,000.
Yep.
And that created a lot of problems for Poor old Kevin. We were able to resolve it, but it took about a half a year to get it fixed.
Yeah.
Yeah, yeah. Are we good on this one, Kelsey?
Mhm.
All right, let's head on to the next one. So the next one for real estate people, if you are a real estate professional or are claiming that designation, just make sure that you have a time log for 750 hours. Now, obviously, you should always be keeping your logs up to date, but just that's a big one. That's a big one. And this is for passive activity losses where real estate is a main source of your loss income.
Mhm.
Kelsey, any questions on this one?
No.
Oh, you know what? Let me tell you a little bit about the 750-hour rule. So for when it comes to real estate, this has to do with acquisition, funding, running it, thinking about it, managing it, and driving time. So where a lot of people make up time to get to the 750 hours is doing research on buying new properties, making offers. That's another important one. The thinking about it, you're allowed to think. Thinking is a good thing. Research and truth are still a good, I know politically like this, what is truth, what is not truth? It's very ambiguous. The most important thing is document the time that you're searching for the truth, because that does count. And also thinking about management and strategy, that does count. Okay. Let's head to the next one, Kelsey.
Okay.
Download all bank statements, credit card statements, utility statements, check images, deposit images, get it in PDF format, QuickBooks format, Excel format, just get everything. So what happens is, and I see this, Kelsey, so accounting is a weird thing. Problems in the accounting world is we do something today, but the IRS has several years to go back
Yeah.
to investigate something. And what often happens is whatever happens today, tomorrow, in 3 years from now, you've moved, you've got a new boyfriend, old boyfriend, new husband, new wife, old kids, new kids, mom and dad died. You get cancer, maybe you're dead, and now someone's taking care of your estate for you. And bank accounts get closed, utilities get closed, all the information that you have access today is shut down for whatever reason. As an interesting aside, FTX currently is in the news because they're about to be shut down.
Wow. And
why that's critical is well, we have access to that information today, and then in probably 2 months, that whole website will be done, closed. So, and the idea is when there's an IRS problem, it almost always happens 2 years later. So whatever today's date is, 2 years from today is when the IRS will ask for that information. And then you'll log into your computer, and it'll be unavailable. And then the IRS auditor will be like, sorry, you don't have records, disallowed, have a nice day. Disallowed, have a nice day. Have a nice day. It's your fault, you didn't do it. And the thing is, they're right. So just download everything today. Again, I prefer all different formats. So whether that's the QuickBooks format to integrate into a QuickBooks file, whether it's a PDF format of just the actual information, whether it's the check image, both the deposits and the checks, get those. If you do wires, get those. Oh, Kelsey.
Yeah.
Oh, I just remembered, this is a big one. Venmo and PayPal.
Oh yeah, those.
So also, if you're doing Venmo and PayPal, who is it to and what is it for, and trying to get an invoice attached to it. So oftentimes when you have Venmo and PayPal, it really just, it has money out, but you have no idea where it went to or what it was for. So in addition to the Venmo and PayPal statements, also go to your actual emails of who it was sent to and what it was for. Very important. Would you say that's accurate, Kelsey?
Very.
Yeah. And as of today, Venmo and PayPal are really shitty. They've got shitty statements, really shitty statements. So hopefully, I think they'll fix that in the future, but do that today. All right, moving along. If you've got children that you do year-end payrolls, make sure you do that by year-end. Document whatever they've done for you. Make sure it's reasonable for what it is. Kelsey, any questions on this one?
No.
Okie dokie. The next one. If you're doing a 401k, make sure it's funded as of December. Oh, I should put this, yeah. 401ks need to be established by year end and ideally funded by year end. I know some people will stretch it all the way to January 15th, but they hate doing that. So if you're going to do a 401k, make sure it's established and funded by December 31st.
Mhm.
Kelsey, any questions on this one?
No.
Defined
How
benefit
much-
plans, same kind of deal. Just make sure that it's started and you've got it timely started and you've done your health and you've done your health checkup and your medical exam and it's all that good and it's fully started up and implemented and funded by whatever start date is required.
Adam, I did have a question. For the
Yeah, go for it.
401k, how much can our clients contribute, or is it
Yeah,
Very-
that's a great question. So for the 401k, it changes every year, but it's around 20-ish thousand if you're under a certain age,
Mhm.
under 50, 40 something. And then if you're over that age, it's like around 26K.
Wow.
Now, defined benefit plans are different. This is subject to W-2. So amount. So for example, this is where you actually have an actuary plus the third, what they call them TPA, third party administrator. They do a calculation based on your W-2 amount and your health and how old you are. Yeah, so it's W-2 plus health rating plus age equals amount to contribute. So for you listening, you're like, well, what the hell does that mean, Adam? What the hell does that mean? So I'm going to give you kind of what I consider just an honest bullshit answer, is that it's a wide range. So let's say your wage is 100,000. It could be anywhere between 50,000 all the way to like 175. But again, this is a number that the third party administrator would give you.
Good.
I know I'm kind of giving you a bullshit answer, Kelsey, and I feel bad about it, but this is one of those things where it requires a little bit more nuance. Does that kind of make sense?
Mm-hmm.
Yeah. I hate giving bullshit answers, but sadly, sometimes that's what we do. This is also just a really good time to renew monthly, yearly subscriptions like rent, like insurance. If you have any continuity plans, I know a lot, like myself included. Kelsey, I don't know about you, but do you ever look at your monthly bill and you're like, you're paying like $8 for something you have no idea what it's for?
Yeah, like a Hulu add-on.
Yeah, like a Hulu add-on, or maybe you're doing an app and your kid got on it. Like this happens to my kids where they'll do something and then they get signed up and it's like shit. So just check your recurring subscriptions, cancel it, see if you're getting a good deal. Rent is a very interesting thing, Kelsey. Even though residential rent is heading upwards, commercial rent is kind of going downwards in some places, especially if you can convince your landlord that you're struggling. So I think it's worth trying to negotiate a lower rent.
Yeah.
Because the cost to acquire. So if you're a landlord, because I have a lot of landlords as clients, they have to hire an agent to list it and they make about like 20% of the first year. And then there's always a period that it's vacant. So a brand new commercial listing, sometimes you lose about 3 to 4 months worth of rent.
Mm-hmm.
So it's worth trying. Any questions on this one, Kelsey?
No, good.
Okay. All right, we're heading on. A lot of year to do things, right, Kelsey? A lot of shit to do.
Yep. Thanks.
All right.
We're gonna have to do.
Yeah, right. Here's what I would. Okay, next one. This is kind of a simple no-brainer, but just scan as many receipts as possible by name and date. Scan them, send them on over. Any questions on this one, Kelsey?
No.
Okay. This is a really big one for all business owners, is make sure your calendar is up to date and it reflects what you did. And there's some type of time stamped thing that identifies that it did happen. So for example, if you met with Marty on a Tuesday, or let's say you had a telecon, it's very likely that you would, like, if you're an auditor, you'd say like, okay, Mark, you met with, or you spoke with Marty. Was there an email reminder? Did you do a thank you email? Was there some type of documentation? That's an emails are very good with this kind of stuff.
Mhm.
Emails are very good because calendars are very important for audits in general, especially be able to prove or disprove. And oh, here's the key word that IRS auditors love. They call it contemporaneous. Ooh, that's bad spelling. Basically, it happened in the moment.
Yeah.
Like it happened in the moment of. Yeah. So it didn't happen after the fact.
Mhm.
All right. Here's kind of a no-brainer, Kelsey, but I feel like sometimes you have to state the obvious. Like sometimes with my kids, it's like, well, Dad, you didn't say that. I'm like, oh, I thought it was so obvious. So this is one of those, like, I think this is obvious, but it might not be obvious. Get your accounting up to date as much as possible. Okay. So if you're a business owner, get your books up to date as soon as possible. Kelsey, how many of our clients do things way after the fact?
Oh, yeah. They'll schedule an appointment and then they won't have their books ready till a month after the appointment.
Yeah, I would say our average business owner is going to do things about 8 months after the fact. That is average. That is what the average person does. So don't be average, be above average. And
Mhm.
by the way, if you're average, we love you too, because you still pay the bills. And as long as you pay the bills, I promise to be judgment free. Because as long as you're paying money, we offer a judgment free service.
And if you pay more money, there's even less judgment.
Yeah, we pay extra for judgment. Judgment and shame cost more. We charge for that. All right. These are, if you have yearly sales tax, just make sure to file sometime in the first week of the new year. I know there's a lot of people that do yearly sales tax, yearly payroll. Just make sure you do it. I know a lot of you forget to do it. So if you're on the yearly plan, just make sure to do that.
Oh, Adam, for the yearly sales tax, how can we get our clients to get ready for it? Because usually they get a bill after it was due.
Or they get the notice you're late.
Yeah, they get it after.
I think doing this video and hopefully sending out this information, like the only way, they just have to be reminded.
Okay.
So the question is, do you have sales tax? Yes or no? If yes, are you a quarterly filer or are you a yearly filer? And then basically we just have to remind them.
Got it.
Yeah, Kelsey, as a general rule, what I'm finding is clients appreciate and prefer being reminded. So we have to find the fine balance between being helpful versus being a nagging mom.
I agree.
We have to find that fine balance. Because what I find is that most clients are just so busy, they're just so overwhelmed. They just, it's not that they're forgetful or delinquent, it's just they have so many priorities and it's just easy to forget. And so what they're doing is they're kind of just paying us to remind them.
Yeah.
And we are happy to charge you for them. Okay, the next one, if you're on accrual basis, just be aware of what income you've earned versus unearned, what you've earned versus unearned. Yeah. Kelsey, did that make sense?
Yep.
Review if you need any Section 179 equipment for your business. If you have a nice, sizable, juicy profit, is there anything that we can fully depreciate? That's kind of the idea, to lower your taxes. The next one, this is from my real estate peoples. This is a cost segregation report, and this kind of accelerates depreciation. By the way, in 2023, depreciation is not going to be 100%. I believe it's going to go down to 80% as of today, although it might be amended by a new bill, which is probably likely. Kelsey, any questions on this one?
No.
Asset purchase. If you're in the process of purchasing any businesses year end and you're in the process, just make sure that you do need to delineate the assets that you're purchasing and assign a value to each one of those for the purpose of depreciation amortization. Here's another big one that I consider really important, Kelsey. is
Mhm.
business. So, Kelsey, you have a credit score.
Yeah.
For Kelsey, I have a credit score for Adam. Businesses can adopt an additional business credit score for their business. And it's really important to get loans. Most people just haven't even started the process.
Mhm.
So the message on this one is just be aware that your business has its own credit score and you should probably start creating your profile today.
Wow.
And related to this is a business line of credit. I happen to believe, this is my personal opinion, that 2023 is going to be a scary economic year and that credit lines will tighten. So by the time you're in the process of trying to get credit, they'll have already either closed down those accounts, frozen accounts, shrunk the accounts. So start today, so as of today, multiple banks are still offering credit lines. But you just need to start today, whether you need to start building your credit profile or just building relationships with bankers or just understanding what documents you need.
And what documents do they need?
Oh, that's a good question. So what they're going to want is the tax return from the previous year. They're going to want the current year P&L. They're going to want all of your assets and liabilities, a balance sheet for sure, both a business and personal. They're going to want your bank statements. And then they'll do just a check to see, they'll do a credit score report on you and your business.
Got it.
And they'll also look at your business expenses, and then they'll also look at your personal expenses, what it takes for you to live off of. Basically, banks care about one thing is, can you repay the loan? And who do you owe currently money to? Yeah.
Got it.
Are we good on that one, Kelsey?
Mhm.
Here's the next one to be aware of. Just because it's year end, it's just a natural time to think about this, is review your living trust. Do you need, and then, so when it comes to living trust is, did you purchase any assets that need to be retitled into the business? Number two is, did you sell any assets that you just need to take out of the trust? Number three is there anybody that you used to have that you no longer like? So for example, if you got divorced, you probably don't want your ex to be the beneficiary of any of your policies. Kelsey, really funny story, really quick. I had a client of mine where I knew the wife, husband and wife. The husband hated the wife. Husband and wife divorce. Husband forgets to update his insurance policy. Husband gets remarried. Husband dies. But because he never renamed the beneficiary, the new wife didn't get the life insurance policy.
Wow.
Isn't that fucked?
That's messed. Yeah.
And let me guess, do you think the ex-wife was like, you know what? I think I'm gonna hand over this $1 million.
No, not at all.
Nope. It didn't happen. So just be aware of those life situations. Also, if you've got new grandchildren, look, people come and go, and people, sometimes you're happy with your grandchildren, some people you're not happy. I know my parents on a day-to-day, thank God it's not so easy to change your trust. The next thing is, again, this is why I say review life insurance, review healthcare, probably review trust deeds, review named beneficiaries on all policies. Okay. So that's kind of what I have on deck for this one. Kelsey, do you have anything?
No.
Any other thoughts, comments, concerns, questions on all this stuff?
No, that's pretty good.
Okay. So if you've reached the end to this point, star by your name. I really appreciate you. Thank you. If you have any questions, give us a call at the office, email Kelsey if you have any questions, and she'll get it to me, or we can book a call. Anything else, Kelsey, for this call? I think we're pretty good.
Yeah, I'm sure our clients will let us know what we missed on.
Yeah. Is anyone gonna watch this? I don't know. Hopefully, at least one person will.
Hopefully they get to this part with the commentary.
Right. And I bet the person that gets this far is so well organized that they probably don't even need to pay attention to any of these things. That's the irony.
We should give them like a $5 Starbucks gift card if they do.
Okay. If you have gotten to this point and you're a current client of mine, current client as of November 15th, 2020, and you get to this point in the video, I will give you a $5 gift card, but you have to email Kelsey, help@adamlibman.com, help@adamlibman.com, and just say, give me my $5 gift card, and we will give you a $5 gift card to Starbucks for every person who reaches the end of this video.
There we
What do you
go.
think, Kelsey?
That sounds awesome.
I make that promise. Yeah. I'm sure it'll be like one person, right?
Right. Maybe two.
You know who I'm going to predict gets here?
Cool.
And this is for you. I won't say the last name. But Kelsey, you know who I'm talking about, right?
Mm-hmm.
Anne is going to get to here, I bet you. For everybody else, thank you so much. We're done.